Yeah, so we're in the second week of April here. Q1 earnings season, the very early part of Q1 earnings season has started. Typically, what we see is we see U.S. companies report before Canadian companies. So a lot of U.S. names reporting in April. More Canadian names will be reporting in May. But what we did is we looked at all of the releases, all the earnings releases over the past week or the past 7 days, and in total that was 132 companies in North America have released earnings. We took a look at all those. About 20 passed the initial screen in terms of profitability, a little bit of growth. And what I've done is I've just highlighted 5 of these companies that I summarized and talk about. We'll call this the top 5. Top 5 earning releases of the week. So we're going to start with a company, NASDAQ listed, dLocal Limited, DLO. Trades at about $14. It's a $4 billion market cap company. So they're a technology first payments platform company. They released their financial results, their Q4 and full year results on April 4th. And the company reported full year revenue of $419 million. That was up 72% year over year. Gross profit of $202 million, up 55%. Fourth quarter revenue was $118 million, growth of 55%, and fourth quarter gross profit was up 42% to $55 million. The company expanded its operations to 5 new countries in 2022. It grew its merchant base by over 600. Revenues from Africa and Asia experienced fourfold growth year over year, reaching almost $74 million or 18% of total revenues. The company did put out guidance for the full year of 2023. They're expecting total revenue in the range of $620 to $640 million and adjusted EBITDA in the range of $200 to $220 million. Next up is InTouch Insight. So this is a customer experience measurement solutions company. This is a company that was recently in our cash rich report, trading at a price of 44 cents. It's a micro cap, a $12 million market cap. They released their full year 2022 results on April 6th, reporting record revenues up 47% to about $23.5 million. Recurring revenues also grew 35% to just under $22 million. The company actually reported net income for the first time. They reported net income of about $600,000, so still pretty light on the profitability, but that's compared to a loss of $315,000 in 2021. Adjusted EBITDA as well increased 33% to $2.2 million, although the gross margin did decrease slightly to 50.7%. They reported 21% organic growth in SaaS software as a service revenues. And the CEO credits the success in the year to product innovation, strategic acquisitions, and the company anticipates continued SaaS growth and positive EBITDA in 2023, despite economic challenges that the economy faces. Next up, Richardson Electronics, symbol RELL on the NASDAQ. The company is trading at a price of $19 per share. It's a $270 million market cap company, so micro to small cap in the US. They're a global manufacturer of engineered solutions, green energy products, and power grid components. They reported their fiscal Q3 2023 results on April 5th. The company reported its 10th consecutive year, or quarter, mind you, of year-over-year revenue growth. Q3 sales rose 27% to about $70 million. The green energy solution segment saw growth of 103% in sales over fiscal Q3 of last year. Operating income was $7.6 million, and earnings per share more than doubled, 110% growth to 44 cents per share in the quarter. The chairman, CEO, and president, Edward Richardson, highlighted the growth initiatives and how the company is capitalizing on new market opportunities, including the green energy solutions segment. Next, we're going to talk about MSC Industrial Supply. That's MSM on the New York Exchange. Stock trades at $85. It's a near $5 billion market cap company. They're a North American distributor of metalworking and maintenance, repair, and operations products and services. They reported their fiscal Q2 2023 results on April 4th. Q2 net sales were $961 million, up just under 12% year over year. Company's operating income was $114 million. On an adjusted basis, operating income was $117 million, up almost 17%. Adjusted EPS was up over 12% to $1.45 per share. Now, one thing that the company noted is that their average daily sales growth outperformed the industrial production index by 11 percentage points. And management expects to continue this outperformance by leveraging their technical expertise and focusing on their 5 growth drivers. Now, finally, we'll talk about company Science Applications International, SAIC, on the New York Exchange. This company trades for $108. It's a $6 billion market cap company. They are a technology integrator. They serve the defense, space, civilian, and intelligence markets. And they reported their Q4 and full year fiscal 2023 results on April 3rd. Q4 revenues were just under $2 billion, marking year-over-year growth of 10%. Full year revenues, $7.7 billion, a 4% increase. The company grew their Q4 diluted adjusted EPS 36% to $2 per share. Full year adjusted EPS up only about 4% to $7.55. And they also provided guidance for the year of 2024, indicating 3% expected organic revenue growth, 50 basis points of adjusted EBITDA margin expansion, and 10% growth in free cash flow compared to the previous year. And so that does it, our top 5 stocks, top 5 out of 132. There were a couple other there that could have made the cut. They just didn't quite make it, but we're going to see a lot more companies reporting over the upcoming weeks.
No, it's a good summary. Interesting companies on there, like we noted. Richardson Electronics is a company we've met with in person in the past. Interesting quarter they came out with. We're actually set to interview them on Wednesday this week once again. As far as, coming closest to our criteria, it would probably be Richardson on that list right now. It is a good company. I think what spooked the market, they actually, had a tremendous year, but the shares came off the day of the earnings, was, a little bit lower backlog in terms of where they were, around 200 million down to about 175 million. So that it was still roughly flat year over year, but they had gotten to a higher backlog at some point in the year. And Richardson noted that one area of their business specifically was a little bit weaker right now and should be weaker going forward. There are some other areas, like I think Aaron called out that the CEO talked about the green energy area of their business, or the green area of their business, which could more than offset some weakness in some other areas. So it's an interesting business for sure. And we'll interview them this week and get to know them even a little more.
Yeah, pretty big drop after the results were reported, down from $21.50 to just under $18 per share. But since then,
as
it's
we see
recovered,
today, it's up. So it may have been a bit of an overreaction there. The valuations aren't bad long term. We just have to see if there's some growth. I mean, it's a company that's been around for about 70 years. Like the CEO bears the name Richardson. It kind of reminds me in some respects of Hammond Power. I've talked about this before. The CEO of Hammond Powers, the last name is Hammond. Now he's transitioning out, but it was founded by his great grandfather, like 100+ years ago, roughly, in the electronics industry as well. So interesting firms, kind of names that you don't hear a lot about in the market. Certainly Canada, no other analyst was covering Hammond Power, and it's similarly in the US. There's not a lot of analysts that cover Richardson either. And InTouch is an interesting company from that list too. Yeah, even D-Local, the growth looked really strong. It did look like they, on an EPS basis, they were slightly down despite the strong quarterly growth. But those are some interesting companies. Those are the type of companies that we, bring forward each week, have a meeting, talk about, discuss these businesses, look into them, and see if we want to, go further with an interview and potentially bring it forward as a recommendation to clients.